this exercise 1-15 from chapter 1 is one of my favorite exercises. Make sure you know how to come up or calculate net income for these 4 different companies, 4 different scenarios, when they give you enough information as to total assets and total liabilities at the beginning of the year and at the end of the year. So to do this quickly, the way I would approach this type of problem is by using the accounting equation and plugging in the amounts that they're giving me. Okay, so total assets 85,200 at the beginning, total liabilities 34,100 at the beginning, and then obviously I will come up with the difference of these two numbers to give me equity at the beginning. I will do the same thing for end of year. 136,300 is the total assets. At the end of the year, 57,200 is the total liabilities. 12 months later, at the end of the year, therefore my equity at the end of the year has to be the difference between these two numbers, which is 79,100. So I basically plug in all the numbers for you. Now the next thing I want you to do is, if equity is 51,100, if you want, let me get rid of this number, okay? And at the end of the year, equity 79,100. We know that the sum of capital stock or stockholders' investment plus retained earnings at the end of the year, these two numbers, the change to these two numbers during the year has to be what? The difference, which is 28,000. The change to equity, the net change needs to be 28. So again, these two numbers has to give me $28,000. Okay, so how can I explain that? With the information that they're going to give me for the first company, how do I make the numbers to explain what actually happened during the year? All right. So it says the first company, no additional stock. So let me plug in here 0, no additional stock issued. And then it says no dividends were paid. So here I'm going to put 0. So again, 0, 0, 0. And then I'm saying, okay, retained earnings is basically income minus dividends. So what amount do you think I need income to be during this year to have these two things together, 28 minus 0 dividends, to be equal to an increase of retained earnings 28, and again, retained earnings to be 28. So the answer is basically income has to be $28,000 in order for the ending equity balance to be at the end of the year 79,100. So I'm going to go and check my work. Perfect. Okay. Now for the next scenario. So if you want, I'm going to erase. Erase this, erase that, erase this. Okay, perfect. All right. So again, the sum here has to be 28,000. So that stays the same. So between capital stock and retained earnings, between these two numbers, I need $28,000. So again, 51,000 plus 28 will give me 79,100. So let's see, for the second company, there's no additional stock. So this 0, 0, okay? And dividends were 6,400. So I'm going to put here minus 6,400. And then I'm going to say pretty much the same. How much do I need income? Or how much do I think income had to be during this year? So I take away 6,400 and I still end up with an increase to retained earnings of $28,000, because again, this plus $28,000 will give me the answer. Okay, so again, I'm solving for net income. Income has to be what? Well, basically, income has to be $6,400 more than in the previous example. So if you take $28,000 plus 6,400, you get 34,400. Okay. So again, if income for the year, keep in mind, income increases retained earnings. So if income was 34,400 and the owners took dividends of 6,400, this minus that will give you the $28,000 that you need to explain why equity at the end of the year went up to 79,100. So again, I'm going to plug in here net income. I'm going to put here 34,400, and I'm going to check my work. All right. The third example, okay, the third company. So when I get rid of this, get rid of that, get rid of this, get rid of that, okay? And then I'm going to go with the third scenario. The owners made an investment of 17,300 stock issued. So this number is 17,300, okay? So for the first time, we have stock issued, which again, it increases equity. So equity went up again by the $28,000. But again, the equity went up. Part of the reason why it went up is because of this capital stock. Capital stock increases stockholders' equity. So this, in this example, retained earnings needs to be the difference between 28 and that. So I'm going to plug in here a little form. I'm going to say retained earnings went up by 17,300 and the difference of, okay? So in other words, retained earnings is not minus 10,700, it's 10,700, okay? So in other words, the combination of these two numbers needs to give me $28,000. So retained earnings went up by 10,700, and they tell you that the dividends were zero. I'm gonna put here zero. So what do I need income this year? What do you think was income this year to end up with retained earnings going up by that? Well, income had to be 10,700 since there were no income. I'm sorry, since there were no dividends. So this will be 10,700. And again, when I basically take the investment plus the amount of retained earnings, okay, I end up with my 79,100. So here I'm going to put income 10,700, and I'm going to check my work, okay? And then the last scenario is the most challenging because it has a combination of everything. So let me get rid of everything, okay? And get rid of that, okay? Now, keep in mind the net increase to equity, just like in the other three examples that we did, has to be a net increase of 28,000. So I'm gonna plug in here the additional stock that was issued during the year. The reason why equity went up, part of the reason why is because they issue stocks, and common stock owners investment, stockholders investment increases equity. So I'm going to plug in here 14,100. If you want, I can also put it here, okay, so you can see it. Okay, so now my question is, what is the amount of retained earnings or the increase to retained earnings in order for us to end up with $28,000? So just like I did before, it's basically the difference of $28,000 against 14,100. This number needs to be 13,900. So retained earnings must have increased by this amount. Now, remember, retained earnings is these two numbers together. Income increases retained earnings, dividends decrease retained earnings. So if dividends during the year where this number was 6,700 and dividends decrease this number, what do you think income has to be? So when you take away this amount, you still end up with 13,900. So basically you need to look at 13,900 and then take the dividends into account, okay? And dividends were 6,700. So in other words, net income had to be during the year 20,600, because if this is the amount of income and this is the amount of dividends, these two together would result in an increase to retained earnings of 13,900, and that would explain, again, when I plug in here 13,900, that would explain why beginning balance plus investment plus retained earnings gives you the ending balance. So again, let me make sure that the answer is correct. Income had to be 20,600, and I will check my work, and it's perfect. Okay, so if you have any questions, let me know, but this is how I would solve this type of problem, and you will see this on quiz 1 and also on the final exam. All right, so make sure that you know how to do this. If I change the numbers and I change the distribution, the amount of common stock and dividends, but you understand the logic behind how retained earnings increases when you have net income, decreases when you have net loss, and also retained earnings decreases when you have dividends. All right, thank you.